C.A. Jagreedi's firm grew too fast. They accepted complex clients without vetting their backgrounds or verifying the team's technical experience. This lack of oversight led to a catastrophic failure. Jagreedi signed an audit report declaring a profit for a company that audited a massive loss. A mistake of that magnitude triggers immediate, severe regulatory fallout. In India, the National Financial Reporting Authority, NFRA, and the Peer Review Board actively hunt for these types of systemic failures to protect the public interest. Preventing this chaos requires a mandatory two-tiered regulatory framework specifically designed to govern audit quality. Audit quality is a highly engineered state. It requires a rigid internal system capable of resisting the immense commercial pressures to prioritize speed over accuracy. The first tier is SQC 1. This macro-level standard applies to the entire chartered accountant firm across every assurance and related services engagement on their books. The second tier is SA 220. This micro-level standard governs the specific quality control procedures implemented by an individual audit team during a single engagement. The relationship between the two relies on the sine qua non rule. An engagement team operates within the firm's broader system. If the SQC1 architecture fails at the firm level, SA 220 cannot function at the engagement level. A brilliant auditor will still fail if the firm's overarching quality architecture is broken. The SQC1 framework rests on 6 pillars. First, leadership responsibilities. The CEO assumes ultimate responsibility for the quality control system. Commercial considerations can never override audit quality. It is non-negotiable. This supports the second pillar, ethical requirements governed by the ICAI code. Independence is the core component here. If a threat to independence arises, the firm must follow a strict protocol. Personnel must notify the firm evaluates the threat, and then they must either apply safeguards or formally withdraw from the engagement. If leadership fails to prioritize these ethics from the top, the remaining operational pillars will buckle under client pressure. The third pillar covers the acceptance and continuance of client relationships. Firms must vet the clients they choose to represent. Before accepting a client, the firm evaluates 3 mandatory checkpoints: the client's integrity, the firm's own competence and resources, and compliance with ethical requirements. Exam scenarios often ask what happens when a conflict of interest is discovered after acceptance. The firm must document the resolution, apply safeguards, or formally withdraw and report the situation to regulators. After selecting the right clients, the firm needs the right people. This is the fourth pillar, human resources. The firm establishes documented policies for recruitment, performance evaluation, and career development. This ensures audit teams possess the exact competence required for their assignments. These 2 pillars act as the firm's immune system, blocking toxic clients while ensuring only capable professionals handle the work. The 5th pillar is engagement performance. This is the technical engine where the actual audit work is executed and supervised. Under this pillar, firms maintain a strict requirement for consultation. When teams face contentious technical matters, they must consult experts, document the results, and implement those conclusions. This phase requires an Engagement Quality Control Reviewer, or EQCR. The reviewer must be a qualified professional outside the engagement team. For the exam, note their duties. The EQCR evaluates the team's significant judgments, verifies independence, and ensures final documentation supports the report's conclusions. The final pillar is monitoring. Monitoring is the firm's internal self-check. It ensures the quality control system across the first 5 pillars remains relevant and effective over time. Performance and monitoring transform theoretical policies into consistent, high-quality audit execution. The firm establishes the macro environment using the 6 pillars of SQC1, providing the stable foundation the engagement partner needs to execute the audit under SA 220. Avoid confusing the jurisdictions during your exam. If a case study focuses on firm-wide policies or client acceptance, apply SQC1. If it focuses on a partner's specific actions on a single audit, apply SA 220. I recommend memorizing the specific protocols for withdrawing from an engagement and the exact role of the EQCR. These areas appear frequently in the examination. Audit quality functions as a rigid regulatory science. Mastering this architecture provides the necessary foundation for professional practice and the advanced auditing examination.